What the heck is going on with oil? Why have prices crashed over 30% in the last few months? This is almost as bad as that recent drop in Bitcoin, which I know is a very sensitive topic for a lot of investors. HODL. But what's caused oil to drop this hard, this fast? Well, that's what we're gonna talk about on today's episode of Real Vision's The One Thing. What's going on, investors? AK here. Now, the first thing to understand about the oil price that everyone talks about is that it's actually the WTI crude oil front month futures contract. So it's a derivative. The reason we look at futures contracts is because of the amount of money that trades transparently in that market. It lets you really see the supply and demand in action. And just like everything else, the price of oil is determined by supply and demand. Supply comes from oil producers and demand comes from a healthy economy that needs oil to function. If there's more demand than supply, then prices are squeezed and they go up. But if there's more supply than demand, prices drop. It's basic economics, which most people get. Now, originally, oil ran up 84% from its low in 2016 to its high in the beginning of October. And that rally started after some tough sanctions were put on Iran, which hurt their ability to sell oil, which reduced supply. Plus, global growth was still decent back then, so the demand was solid. So with more demand than supply, prices shot up. But now, Trump has softened those same sanctions on Iran and has let them sell oil to China. And the world is slowing down economically. So demand is falling while supply is increasing, which is why we're getting a price drop. But of course, it's not just Iran causing the increase in oil supply. Oil is flooding in from everywhere. Saudi Arabia raised their production in November to an all-time high of 11 million barrels per day. But even more than the Saudis, it's the US that's really flooding the market. Since 2007, US oil production has tripled from 4 million to 12 million barrels a day. Fracking and the shale boom helped the US overtake both Russia and Saudi Arabia to become the world's #1 oil producer for the first time since 1973. Now, Trump, he's super excited about the drop in oil because he says it's basically like a tax cut that's gonna help the economy. Now, it is true that lower oil prices are great for a lot of businesses because their production costs are cut, but now that the US is the biggest oil producer, low oil prices actually hurt more than they help. Take Texas, for example, where everything is bigger, including the economy. Texas accounts for 9% of the US's GDP, which is second only to California. They're the fastest growing state in the country, and a big reason for that is because the oil boom has been really helpful to them. The Permian Basin in Texas alone accounts for 3 million barrels a day of shale oil. Now, what do you think is gonna happen to Texas' economy if oil prices stay low? And you can imagine how bad that'll affect the US's GDP. It is not gonna be good, and that's why it's important to keep an eye on where oil prices are going. Now, some traders see an opportunity to play oil as it falls. Check out this clip from a Real Vision interview with Bob Iacchino from Path Trading Partners.
Crude oil move has been dramatic, and recently we've had a fundamental shift that might be forming a base. The sell-off we've seen in crude oil was justified, taking the geopolitical premium out of crude oil, as well as adjusting for the increase in supply versus aggregate demand. That's definitely taken out of the market now, and we're getting to a potential basing area.
Clearly, the oil trend is important to track because of its large effect on the global economy. So if you're interested in diving deeper into what's going on, make sure you sign up for Real Vision. I'll see you next week.